Right. So, hello people. I'm here and today we're going to do what would I call this? A breakdown of the markets for this week, right? We're in I think it's the first week of July. Hold on. So, we're in the first week of July, right? And the second week, well, I wouldn't really call it the first week, but still, it's the first week of July, right? Today is Saturday, 2026, 4, right? So the 4th of July, 2026 on a Saturday. Now, the market will open on Sunday for me because that's just within my time zone, right? So, yeah. So let's get into these markets that we have currently trying to trade from Sunday, which is July 5th, go straight back to Friday, which is July 10th. So let's get started. All right, so first and foremost, GPUSD. Now, there's gonna be more than one part for this episode because due to YouTube, the fact that I can only upload like a video up to 10 minutes, and it might be longer than 10 minutes, so there might be part one, part two, and part three. I guess I don't know, but let's get into it. All right, so GPUSD. First and foremost, just want to state that we're gonna do a top-down analysis. So when we're talking about top-down, right, we're talking about the trend of the market, right? We're talking about era of interest, and we're also talking about like the entry and stuff, right? So those are three major concepts that we're talking about when you're talking about top analysis. So let's get into the trend first. So the trend of this GPUSD, right, which is the currency pair, the trend of this pair right here, as you guys can see, is clearly bullish. So higher high, higher low, higher high, had a shifter structure, had a pullback at the previous higher low, right? So I had a pullback there, had a push from there to create a new low low. Then I had a shifter structure once again from here. So this means that we're bullish once more. Came here, create this little. It's kind of like a head and shoulder, but it's not really a head and shoulder spot there. What is kind of there. Anyhow, um, you can see right here again where price came back here, had a push, still bullish by the way, came out within this area of interest. But as I said, we're talking about trend. So the trend of the weekly time frame is currently bullish, right? So the trend is bullish on the weekly time frame. The trend on the day time frame is also bullish. Let's just do it here. Boom, lower low, lower high, lower low, higher high, right? So we're here to come back to create a higher low on the day time frame. I can see here that the day time frame is slowing down. But I don't want to get into that um concept as yet because we're just talking about literally trend. So weekly bullish, daily bullish. There are two time frames that are in sync. So basically this trade already is a legion trade because I'm looking to take it to the downside. The 4 hour time frame, let's check on this. The 4 hour time frame is also bullish. So the three higher time frames, which is the weekly, the daily, and the 4 hour, they are all bullish, which means I should be taking this trade to the upside. But this is gonna be a legion trade. Now let's look on the air of interest. You can see that every time price comes here, right? Let's delete this for a second. God, this is not really necessary right now. Put this as small as possible. Okay. So you can see that every time price comes within this area, it rejects the downside or the upside. If it's below, it goes down. If it's above, it goes up, right? So price came here, went up, it then obviously came back down, but that's just an example. Price went above, came back here, right? It then had a push to the upside all the way up there, right? Price came below once again, had a push to the downside, came above, had a push to the upside, but not anything crazy, right? And that can be due to certain facts, like certain reasons why it did not go up. Now, as you can see here, right, in the weekly, we are below this year of interest, right? So this year of interest right here, we are below this year of interest on the weekly time frame. And daily time frame, we're also below this EF inches. And this EF inches have more than one touch. Well, they have more than three touches, right? Because you need three or more touches for EF inches to be valid. And this right here has more than three touches. So that means it's a valid EF inches. So with that being said, you can see here on the day that price started to slow down, right? So it started to slow down once it reaches its EF interest, right? You can see this small rejection from the EF interest and the weekly time frame, right? We close below this head and shoulders pattern here on the weekly time frame as well, right? So the this could be hold on, this could be the left, right? The head, right? And then the shoulder right here, right? That could be the head and shoulders pattern right there, literally. Or it could be somewhere up here, right? It could be something like that. No, regardless, is a head and shoulders pattern right here. I might not know how to mark it out properly because of how it's looking, but I can definitely see the head and shoulders pattern, right? And then, as I was saying, I can see that small rejection on the weekly time frame candlestick. No, and daily time frame, I can see this head and shoulders once again, right? This one is even more kind of clear than the previous one, right? So head and shoulders there. Then we had a pullback, had a push. We're actually having a pullback once again. So we might have a push from this area, here for instance again. That's on daily. Now, as I was saying, on the daily time frame, you can see that price slow down once it reaches the F interest. We close as a doji candlestick after we had this day rejection candlestick right here, as in the daily candlestick having a pullback, right? We then proceeded to close as a doji candlestick, or if you want to call it a gravestone candlestick on the day time frame. So that's two components right there, right? Because price is slowing down. So that's two reasons why I would want to take a trade downside on the day time frame alone, right? And the weekly time frame we have one. So let's get into the 4 hour time frame now. You can see here on the 4 hour time frame where price literally came within this area, had those liquidity grab, and now you can see that price is also doing this thing where it's creating a double top formation, right? If it does break below its EF inches, had a pullback, it will be interesting taking it straight to the downside. That's so simple as how this goes. Now, my entry would obviously have to be an engulfing from this EF inches once you get a break and a pullback within this area, right? So if we should break from this area and go below, right? Basically, you see here, if we should break from this area and go below here, and then have a pullback within this area, then that's where we start looking for for my entry signal to enter this trade. Pretty simple. So that's it for GPUSD. You can take it straight to downside. And also the fact that um the daily time frame, right? If it's gonna continue to go bullish, we need a pullback. So that's why I'm also interested in taking a trade to somewhere down here because they need a pullback in order to go to continue forward. Right, and you can see that it's slowing down, meaning it probably want a pullback right now. All right, so that's one pair. Hold on, get my laptop off charge. Okay, so that's one pair. Let's get into that. Okay, so that's a GPUSD. Let's go on NZDCHF.